Peter Dempsey is in our studio. He's the Deputy CEO for the Association of Savings and Investment South Africa, also known as ASISA. Good morning to you, Peter. This morning, the topic is the sandwich generation, and it's not about breakfast. Tell us what it is.
Morning, David. The sandwich generation was coined in 2006 by a psychologist who wrote about the syndrome. And effectively what it is where you have a family who are sandwiched between looking after their children as well as their parents. So typically they would have either young children or children who can't find work if they're a bit older, and they're also responsible for one or both sets of parents at the same time, and they're kind of stuck in the middle.
This would be very common, one would say, in South Africa. I mean, we do see a lot of this. Is this something that is just something that we just see in South Africa or throughout the rest of the African continent, the common occurrence?
It is a common occurrence, and it's not restricted to any particular geography. It's a worldwide phenomenon. And in South Africa, there was research done last year which showed that of the people polled, 40% of them, when asked the question, said that they expected their children to look after them. 30-odd% said that they expected the state to look after them. And over a quarter of those polled are already in the sandwich generation. And it is a real issue which is highlighted in South Africa by the number of other challenges we have, for example, with child-headed households, which exacerbates the problem and just creates a further legacy of the same issue.
But Peter, I suppose there are interesting reasons for this. People get married later, people are living longer, so they're with the kids later in their lives than they used to be, and their parents are living longer. But you also made a comment about the way people save. So this is a social issue, the sandwich generation, but it's also the way South Africans save. And you made an interesting point in one of the articles you wrote talking about saving for a car, to buy a new car, is not really saving.
Correct. I would argue that there's a misconception that if you're saving for a car or a holiday or a new mobile phone or perhaps an asset like a lounge suite or something of that order, is not really saving. It's simply a staged way to fund your consumption. Saving is something different. Saving is when you forego the consumption completely for a later and a different goal. For example, a goal of retirement or funding children's education, or if you're acquiring an asset which has got some value, for example, a property. And people confuse the two. They say that they're saving because they use that money to go on holiday at the end of the year.
Peter, what is the financial industry doing to respond to this? This is obviously a need now to tackle this issue. What's being done?
There's a multi-pronged initiative currently that's been going for a number of years, but it's now gaining some more speed, and that is, the first pillar is education. A lot of people don't think about this, and they don't realize that they are in fact becoming sandwiched. So a lot of the issues that lead to this, and David touched on them, there's not much that the individual household can do about it. So you can't do anything about the fact that your adult children can't get work. You can't do anything about the fact that your parents, because of insufficient savings or living too long or health issues, are unable to fund their lifestyles and become dependent on you. So one needs to accept that. If you acknowledge that it is a goal, a savings goal or a savings imperative, then that's step one. So that awareness really is the educational part. The next step is then putting that as one of your financial goals in a plan and working if possible with an advisor. And then the third step is to, once you have the plan, is to put the product building blocks in place. And these include things like collective investment schemes, bank deposits and others. So, but the real key, we argue, is that it's actually an educational issue first. People don't see this as one of the goals for which they should be saving.
Peter, what's the range of products available? One thinks of some companies like Old Mutual, Momentum, where I think Momentum's, it's a financial wellness. So there's this pack that you fill in and that you consult, and they tell you where your weaknesses are financially, where your strengths are. And I think a lot of people might not have got into trouble years ago if they'd had that kind of advice, as opposed to simply putting money in an insurance policy or in the bank account, savings account. So what you're wanting here is a kind of tool that says, you're in danger of becoming a sandwich payer long before you think of these things. So your kids are a certain age, your parents are a certain age, they're healthy, etc.
That's exactly right. And it all starts effectively with the real, if one can call it, the brutal diagnostic of what your circumstances actually are. Whether you're the person who is the dependent parent or you are the family who are responsible for the dependent parent, that's the first step. It's confronting it. And then it's about sticking to the plan. So many people who are in this position actually did have financial plans and financial goals that they set. The problem is that saving is not particularly sexy, and saving is not that much fun because you're giving up something else. So the ability to stick to the plan is the key thing. And a lot of people who today are in the dependency state are there because they didn't stick to their plan. Some are there because they couldn't help it. They've lived too long, which is a terrible thing. But for many of them, it's simply not understanding what the reality was.
Peter, just to go back to some of those stats that David quoted earlier, this was from the 2014 Old Mutual Savings and Investment Monitor. You say 39% of participants believe that children should look after them, and 23% of households that were surveyed fall into the sandwich generation. Looking at these numbers, how big do you think that market is? This is definitely a potential here for more financial companies and institutions to come up with innovative products. How much money are they able to make, or how big is this market that they can capture?
Well, if you look at if the survey is a snapshot and a replica of what is happening in the heartland of South Africa, and I'd argue that it probably is. If that's correct, you have something like 5.5 million employed South Africans, and something like another 5.5 million who are surviving through informal trading. But if you look at the 5.5 million as the one that we know about, the other stat in that survey said that 60% of the people surveyed in their mid-30s to mid-40s were worried about the fact that they would have to care for both sets of dependents, older and younger. So if we take that as an example, it gives you a market of something like, ballpark figure, something like 3 million people. So the need there is twofold. One is for the advice component, and advice is so often underrated in terms of the role that it plays in helping people to understand what the issues are, and then keeping them to it. And from a product point of view, it's a wonderful opportunity, obviously, for financial services companies to deliver product either directly or through the advice-led channel into these citizens. These citizens are going to need it.
Peter, you say the phrase was coined in 2006. I presume some people in the industry were thinking about this before that, because it's not a phenomenon that just appeared in 2006. But that's now 10 years ago. Is there a sense that there has been a change of behavior in that market? How many people have actually changed their behavior and prepared for being that sandwich payer?
You're quite right. I mean, this awareness has been there since long before 2006. It was captured by somebody at that stage to describe it, but it certainly wasn't a new phenomenon. Has there been a change in behavior? There certainly has been an increase in the savings rates in South Africa. Unfortunately, that increase in savings rate has been matched and in fact surpassed by an increase in indebtedness rates. So the net effect is that over the last decade or so, South Africans have saved less. So has there been a significant behavior change? The numbers don't show that. So the problem is still there, and the problem is still going to be there, and unless there's almost a sea change of behavior that happens at individual level, I feel we'll be having this conversation in some years' time and talking about the same thing.
Thanks so much to Peter Dempsey. He is from ASISA, the Association of Financial Institutions there.